What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 3 high-yield dividend stocks to buy that are less than $30. These are energy stocks. They have increased their dividends over time. Of course, I'm going to add a bonus stock for you guys as well. So we're at 6,000 dividend warriors strong. So you guys have been fantastic. A lot of you guys that subscribe to the channel, you got to hit that notification bell so you don't miss future videos. And if you're new, welcome. All these videos are free for you guys. All I ask you to do is hit that smash that like button, and we're rolling. So I'm all amped up on caffeine right here. As you can tell, I'm motor mouthing, and I have a big paper that's due Sunday, so I just want to set the tone early. And I'm ready. I'm pretty pumped up for this video. It's Monday. Worked some 2 shifts over the weekend, and I'm fresh. Got a good workout in, good chest workout. Of course, it's National Chest Workout Day on Monday. And let's check these stocks out right now. That first dividend stock is South Jersey Industries. The symbol is SJI, and it has a PE ratio of 22.48 with a dividend yield of 5.5%. So anytime I look at an energy stock, okay, because I have Enbridge, I have One Oak, I always look into if these guys are hot, what they're about. Do they have good dividend increases? Its year range was 1877 to 2924. So anytime I look at a energy stock, like I said, I always want to look into and see what's in it. What is this company about? What's their territory? You always want to know territory. Natural gas companies, I always tell people, I always look at their territory. How big are they? Because, I own a utility company, First Energy, and I showed you the map. They're pretty big. They're a juggernaut in Ohio and some of the East Coast and stuff. So we need to know South Jersey Industries, how big they are. So let's check these guys out. SJI, as they say with their symbol, is an energy services holding company based in Foldstorm, New Jersey. Delivers energy services to its customers through 3 primary subsidiaries: SGI Utilities, SGI regulated natural gas and utility businesses, deliver safe, reliable, affordable natural gas to approximately 700,000 South Jersey Gas and Elizabethtown Gas customers. SGA's non-utility businesses within the South Jersey Energy Solutions promote efficiency, clean technology, and renewable energy by providing customized wholesale commodity marketing and fuel management services, and developing, owning, and operating on-site energy production and facilities. SGI Midstream houses the company's interest in the Penn East Pipeline project. So that's what they're about. Are they making money? We need to check that out. Okay, before we even start, I just want to let you guys know, one of my buddies in my Investor of the Week is Dividend Seeker. He has some really good stuff. And this guy runs circles around me. He's a CPA, and as you can tell, the coffee's really kicking in. He's a CPA, and he has done a phenomenal job. He's a fantastic investor. I'm going to have him in my comment section after this video, so make sure you check that out if you're interested. Really good stuff. So right here, we got the revenue. 2014, this is in millions of US dollars, 886, 959. 1,036, 1,243, 1,641, 1,628, a little bit down 2019. 2020, not too bad with the pandemic hitting. So it's 1,541.383. So this Jersey, this is big. Now, I want you guys to think about this. I'm just giving you an example of my apartment complex and why natural gas is important. First Energy, the energy goes out. Who is powering my apartment complex when the wind goes crazy and everything? Natural gas. So natural gas is important. You're heating stuff. Natural gas is just, it's used in a lot of things for heating, generators. It's very important. But what's really awesome about these guys is their dividend history, which I'll show you. So right here, 2016, 27 cents, 2017, 28 cents. 2019, 28 cents, 2020, 29 cents, 2021, 30 cents. So it has a 5.49% dividend yield, a PE ratio of 22.26, and it has increased its dividends. It is less than $30. So a 5.49% dividend yield, $22.50. that's a good deal. That's definitely on my radar. I need to add on my M1 Finance dividend portfolio a section with energy and utilities, and these guys are one of them. I think financial sector I might just do on E-Trade, but energy I need to add on M1 Finance. Probably that, and the pharmaceutical sector I'm probably looking at, and a few other things, but these guys are definitely on my radar for the energy section. So once I get about $35,000 in my M1 Finance dividend portfolio, I'm probably going to do energy. And these guys are definitely on my radar. I have high interest in these guys. And again, none of this is financial advice. This is for entertainment purposes only. I have a disclaimer in the descriptions, but hot stock. That's all I have to say. Let's jump to the next one. Next one is Western Midstream Partners. It's sitting at $23.16, a dividend yield of 5.51%, a PE ratio of 10.72. Its year range was $7.40 to $23.79. There is a dip. So that's one thing to keep an eye on, is the dip is there. But we really need to know, again, the territory. How big are these guys? What are they about? So let's check these guys out. Their primary business objective is to create long-term value for their unit holders through continued delivery of high returns per unit cash distributions over time by constructing, acquiring, and expanding midstream assets in high-quality producing basins and delivering industry-leading levels of service to all their customers. So to accomplish the objective, they need to execute the following strategy. Pursue organic growth opportunities by evaluating economically attractive organic expansion opportunities in existing to new areas of operation that allow us to leverage our infrastructure, operating expertise, and customer relationships to meet new or increased demand to our services. Control their operating capital and administrative costs while continuing to optimize and maximum operability for their assets, protect their cash flows by reducing commodity price risk through the fee-based contracts and reducing volumetric risk through the demand charge and cost of contracts. Commit to operational excellence that will safeguard our employees and local communities. Okay, let's see some more stuff. And this is what I like. So Western Midstream is committed to providing high-quality midstream service at a competitive price. We contract with Occidental to manage and operate our assets. So here's just one. Here is a non-operated Marcellus gathering in Lycoming County. So they have a pipeline miles 146. Here's processing amount valued at a chamber in Chambers County. They have processing treating plants. Here's a pipeline, Panola Pipeline. Here is a processing capacity. This is a treating plant. Here is a compressor stations. So there's their Springfield system, treating plants. Here's another gas processing plant. Oil services, their compression stations. Water systems, okay. Operating horsepower of 50,750. So they have some decent stuff. What do they got over here? Pipeline. They got a basin complex, processing treating plants. So they got a wide variety. Here's a compressor station, treating plant, processing, gathering and processing, and pipeline. So pretty well diversified. I really have some interest in these guys, and I'll show you a few other things that make them on my radar for sure. So again, this is in millions of US dollars: 1,533, 1,752, 1,804, 2,429, 2,299, 2,746, 2,772. So we got some consistency there. So that's what I like about these guys, and I like their dividend history, which make them very attractive. I want you guys to be aware there is a little bit of a drop, but they are increasing their dividend. So 2019 to 2020, they went from 62 cents to 31 cents, but they're slowly increasing their dividend. So that's one thing that's pretty attractive right now. You're starting to see a dividend increase. There is a big dip there at 23.16, and it has a dividend yield of 5.46, PE ratio 10.72. So revenue's good. Dividends are increasing post-pandemic. I mean, you can play the pandemic card for some dividend cuts. That's totally understandable. So that one's on my radar. They are increasing their dividend, which makes them attractive. They're sitting at $23. That's not bad at all. Let's jump to the next dividend stock. And that stock is Hess Midstream. It has a dividend yield of 7.64%, a PE ratio 16.98. A year range is 1570 to 3035. The day range was 2631 to 2790. So we need to look a little bit more into these guys to see what's going on. Is 7.64% a yield trap? We'll have to look into this. Hess Midstream, HESM, and by the way, the last stock had the symbol of WES. Hess Midstream is a fee-based, growth-oriented midstream company that owns high-quality infrastructure located in the core of the Bakken. Hopefully I said that right. The relationship we have with our sponsors, especially Hess, is our principal strengths. The corporation is a global independent energy company engaged in the exploration and production of crude oil and natural gas. Global Infrastructure Partners is an independent infrastructure fund that invests in infrastructure assets and business across three core sectors: energy, transportation, and water and waste. Visit GIP, Global Infrastructure Partners. So the prolific North Dakota Bakken Shale region, integrated infrastructure in the core of the Bakken, hopefully I said it right, provides competitive advantage to Hess and third parties. Their integrated assets are strategically located at the core of the Bakken and offer a diversified service offering attractive netback pricing and access to range to exploit options. These factors provide us with competitive advantage in capturing additional volumes from third parties, including products that are seeking growth protection in the Bakken and reduce crude oil, trucking, and natural gas flaring. So that's pretty attractive. And let's see how much revenue they're making. This makes things interesting. So 2015, this is in millions US dollars, 565, 509, then 565, 662. So this makes a few things interesting in 2018 with some revenue. I'm going to have to look into a few other things. Here's 2015. It was 565. 2016, it was 509. 2017, 565.8. 2018, 662.4. Let's look at the most recent revenue. So the earnings report in June was 294.8 million. It went up. Net income went up by 107.55%. So that's pretty good. Net profit margin 3.73%, and it was up 90.31%. March 2020, it was a little bit down to 288. December, it was 266. September, 264. So now we're at September 2020, it was 264.8 to June 294.8. That's attractive. Now, what about their dividend history? We are seeing a very significant dividend increase. 2017, it was 31 cents. 2021, it is 50 cents. And it is 26.41 with a 7.35% dividend yield. A PE ratio is 17.15. That is extremely attractive. So the symbol is HESM. Wow. I mean, that's looking at that. I mean, that's one that definitely on my radar for sure. That's interesting. So, you know, you always want to look into, like I said, look into if it's a high yield dividend stock. Is it a yield trap? Is the revenue increasing? What can they bring to consumers? That's the important thing. When I look at, again, I'm going to emphasize this. Anytime I look at energy stocks, I want to see their territory. So their territory is pretty attractive, and it seems like they're helping out with consumers and they're generating revenue. Let's jump to the bonus stock. Bonus stock is Antero Midstream Corp. So they're 11.35. They have a 7.93% dividend yield, a PE ratio of 15.74. Year range is 549 to 1165. What are they about? So Antero Midstream is formed by Antero Resources Corporation to service a rapidly increasing natural gas and NGL production in the Appalachian Basin, headquartered in Denver, Colorado. We are focused on creating value through developing midstream infrastructure in the two of the premier North American shale plays, the Marcellus and Utica shales, due to the market lending and transportation portfolio and midstream ownership through the Antero Midstream. Antero is the most integrated NGL and natural gas business in the U.S. Very interesting. Let's check out the revenue. 792 in 2019 and 2020, 900.719. So they're going up. They're starting to go up. So keep an eye on those guys, and we're going to check out their dividend history. You can tell the pandemic card was being played out. 2019, it was 16 cents. Then it hit 30. Then it hit 30. And then it went down to 25 or 22 cents. So it has a 7.93% dividend yield, PE ratio of 15.76. Keep an eye on these guys. So these four, SJI is the first one, WES, HESM, and AM are the symbols. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Hopefully I wasn't motor mouthing too much. I have a lot of caffeine in me. I'm going to be working on a paper after this YouTube video. So again, you guys are fantastic. We're almost at 7,000 subscribers. So you got to smash that like button, subscribe to this channel, watch these free videos on dividend stocks. And again, I'm not a financial advisor. This is for entertainment purposes only. And I have a disclaimer in the description. And check out Dividend Seeker's works with his ebook. I think it's really phenomenal what he does. And the guy's a phenomenal CPA. So you guys take care. Have a great Monday and have a good one.